Question 1. What is the primary purpose of first-party cyber insurance coverage? A. To protect businesses from lawsuits filed by third parties due to data breaches. B. To cover legal defense costs and regulatory fines. C. To provide compensation for a business's own losses resulting from cyber incidents. D. To ensure compliance with state-level data protection regulations. Answer: C. To provide compensation for a business's own losses resulting from cyber incidents. Explanation: first-party coverage in cyber insurance is specifically designed to protect the insured business from its own losses due to cyber incidents. This includes costs related to data breaches, business interruptions, ransomware attacks, and network restoration. Question 2. Which of the following is an example of a third-party cyber insurance coverage type? A. Data breach and notification costs. B. Cyber extortion and ransomware payments. C. Liability for data breach and privacy violations. D. Business interruption and loss of revenue. Answer: C. Liability for data breach and privacy violations. Explanation: third-party coverage in cyber insurance typically covers liability for damages caused to others, such as customers or clients. This includes coverage for data breach and privacy violations, where the insured business is held responsible for the unauthorized access or loss of personal data belonging to third parties. Question 3. Scenario-based question. Mr. Thompson, the Chief Information Officer (EO) of a large organization, discovers a major data breach. The breach involved personal data being accessed by unauthorized individuals. The company has cyber insurance coverage that includes first-party and third-party coverage. Which of the following actions should Mr. Thompson take first to ensure compliance with both the insurance policy and legal obligations? A. Notify the company's clients and customers of the breach without delay. B. Immediately report the breach to the insurance provider and legal team. C. Begin the process of restoring the affected systems and data. D. Investigate the cause of the breach internally before taking any further steps. Answer: B. Immediately report the breach to the insurance provider and legal team. Explanation: in the event of a data breach, the first step is to notify the insurance provider and legal team. This ensures that the organization meets both its legal obligations and the requirements under its cyber insurance policy. Reporting the incident promptly helps trigger the coverage process, which may include coverage for breach notification costs, legal defense, and other first-party and third-party coverages. Prompt reporting also helps ensure compliance with laws such as Maine's data breach notification law and the GDPR, which often require immediate notifications to both affected individuals and regulatory bodies. Question 4. Which of the following scenarios would most likely be covered under cyber insurance's first-party coverage? A. A business is sued for failing to protect client data, resulting in a lawsuit and legal fees. B. A hacker steals financial data from a business and demands a ransom payment. C. A third-party company sues a business for damages caused by a data breach. D. A business's customers are impacted by a breach of personal data stored in the company's system. Answer: B. A hacker steals financial data from a business and demands a ransom payment. Explanation: first-party coverage in cyber insurance covers the insured's own financial losses, including costs such as paying a ransom in a ransomware attack, restoring systems, and recovering lost data. It does not cover third-party lawsuits or claims, which would fall under third-party liability coverage. Question 5. What is the primary purpose of a cyber insurance policy's network security coverage? A. To provide coverage for data loss or damage to personal information stored in the cloud. B. To protect the business from liability arising from a failure in securing its network. C. To cover costs associated with data restoration after a hardware failure. D. To compensate for loss of revenue due to a network outage. Answer: B. To protect the business from liability arising from a failure in securing its network. Explanation: network security coverage in a cyber insurance policy is designed to protect businesses from liability if they fail to secure their network and allow unauthorized access, leading to a breach or cyber attack. It may also cover legal costs and settlements associated with claims from affected third parties. Question 6. Scenario: a company suffers a cyber attack in which sensitive customer data is stolen and sold on the dark web. The company immediately notifies affected customers, but some customers later file lawsuits. which of the following coverages will most likely protect the company against the lawsuits? A. First-party business interruption coverage. B. Third-party liability coverage for privacy violations. C. Network security and data loss coverage. D. Ransomware coverage. Answer: B. Third-party liability coverage for privacy violations. Explanation: third-party liability coverage for privacy violations protects businesses against claims made by customers or other third parties who are harmed by the company's failure to secure sensitive data. This includes legal fees, settlements, and judgments arising from data breaches. Question 7. Which of the following is typically excluded from cyber insurance policies? A. Costs related to regulatory fines following a breach. B. Costs of restoring lost data after a breach. C. Cyber extortion payments for ransomware attacks. D. Damages caused by employee negligence in handling sensitive data. Answer: A. Costs related to regulatory fines following a breach. Explanation: cyber insurance policies often exclude regulatory fines, penalties, or damages imposed by government bodies after a breach, even if the breach resulted from the company's failure to comply with data protection regulations. Coverage typically applies to the direct financial losses caused by the breach itself, not the legal or regulatory sanctions. Question 8. Which of the following types of cyber insurance coverage is typically designed to help businesses cover the costs of investigating and responding to a data breach? A. Data breach notification coverage. B. Crisis management coverage. C. Network security coverage. D. Business interruption coverage. Answer: B. Crisis management coverage. Explanation: crisis management coverage helps businesses manage the immediate aftermath of a data breach, including costs related to investigating the breach, managing public relations, and engaging with cybersecurity experts. This coverage ensures the business can respond quickly and effectively to minimize reputational damage and legal liabilities. Question 9. Which of the following is most likely to be covered by a cyber insurance policy's business interruption coverage? A. The cost of legal fees for defending against a lawsuit from a customer. B. Lost revenue due to the company's website being offline after DDoS attack. C. Costs associated with notifying affected individuals of a data breach. D. Ransomware payment to a hacker. Answer: B. Lost revenue due to the company's website being offline after DDoS attack. Explanation: business interruption coverage under a cyber insurance policy is designed to compensate for lost revenue or profits due to a disruption in the business's normal operations, such as a website going offline due to a distributed denial of service (DDoS) attack. It does not typically cover the cost of paying ransoms, legal fees, or breach notification costs. Question 10. In the context of a cyber insurance policy, what does the term social engineering refer to? A. An attack where hackers manipulate individuals into divulging sensitive information. B. The process of engineering new technology to prevent cyber attacks. C. The use of social media platforms for marketing purposes to attract clients. D. A method of securing personal data by encrypting it in social media networks. Answer: A. An attack where hackers manipulate individuals into divulging sensitive information. Explanation: social engineering refers to attacks where cybercriminals manipulate individuals into revealing confidential information such as passwords, security codes, or financial details. This often involves tactics like phishing, pretexting, or impersonation. Coverage for social engineering attacks may be included in cyber insurance policies, particularly under fraud-related or crime coverage. Question 11. Which of the following best describes the role of a cybersecurity incident response team CERT in the context of cyber insurance claims? A. CIRT ensures that the company is compliant with data privacy regulations. B. CIRT helps to identify and mitigate threats during a breach and is responsible for managing the investigation. C. CIRT directly negotiates with hackers to pay the ransom. D. CIRT helps with determining the insurance premiums for cyber insurance policies. Answer: B. CIRT helps to identify and mitigate threats during a breach and is responsible for managing the investigation. Explanation: the Cybersecurity Incident Response Team CERT plays a crucial role in addressing and managing cyber incidents. They help identify threats, contain the damage, and lead the investigation into the breach. Their role is essential in minimizing losses and ensuring that a business can respond effectively to reduce the impact of a breach. This can directly affect the claims process for cyber insurance policies. Question 12. Which of the following is typically covered by cyber insurance's third-party liability coverage? A. The cost of restoring data lost during a cyber attack. B. Legal defense costs arising from a lawsuit filed by a customer affected by a data breach. C. The costs of replacing physical assets damaged during a ransomware attack. D. Business interruption costs resulting from a malware attack. Answer: B. Legal defense costs arising from a lawsuit filed by a customer affected by a data breach. Explanation: third-party liability coverage in a cyber insurance policy typically covers the costs associated with lawsuits filed by third parties, such as customers whose data has been compromised due to a business's failure to secure sensitive information. This includes legal defense fees, settlement costs, and any damages awarded. It does not cover data restoration, business interruption, or replacing physical assets. Question 13 scenario: Mr. White's company e-commerce business suffers a ransomware attack causing the website to be taken offline for several days. Customers are unable to make purchases and some are requesting refunds. Mr. White is worried about the financial impact. Which of the following coverages would most likely help mitigate these financial losses? A. Third-party liability coverage. B. Business interruption coverage. C. Data breach notification coverage. D. Cybercrime coverage. Answer: B. Business interruption coverage. Explanation: business interruption coverage is designed to compensate for lost revenue and additional expenses that arise when business operations are disrupted due to a cyber incident, such as a ransomware attack. Since Mr. White's e-commerce business cannot process sales due to the attack, this coverage would help mitigate the financial impact by compensating for lost income and extra costs incurred during the downtime. Question 14. What is typically excluded from coverage under most cyber insurance policies regarding employee negligence? A. Losses resulting from insider threats due to deliberate actions. B. Costs associated with employee negligence leading to a data breach. C. Damages resulting from a third-party vendor's security failure. D. Costs incurred by a company to notify affected individuals after a breach. Answer: A. Losses resulting from insider threats due to deliberate actions. Explanation: most cyber insurance policies exclude coverage for losses arising from deliberate actions by employees, such as intentionally causing a breach or stealing data. However, coverage typically includes losses from negligent actions by employees, such as accidentally exposing sensitive data. Insiders intentionally exploiting their access would usually not be covered. Question 15. Which of the following is true about the impact of Maine's Data Privacy Act, Maine's Data Breach Notification Law, on cyber insurance claims? A. It mandates that insurance policies must cover the cost of regulatory fines due to a data breach. B. It requires businesses to notify affected individuals within a specific time frame, which may trigger insurance claims for breach notification costs. C. It offers tax relief for businesses suffering from data breaches. D. It applies only to health data breaches, not other types of personal data. Answer: B. It requires businesses to notify affected individuals within a specific time frame, which may trigger insurance claims for breach notification costs. Explanation: Maine's Data Privacy Act requires businesses to notify affected individuals if their personal data is compromised. The Act sets forth specific timeframes for notification. These notification costs may be covered under a cyber insurance policy as part of breach notification coverage. The law does not mandate insurance coverage for regulatory fines or tax relief. Question 16. Which of the following types of risks is most likely to be covered under cyber insurance's coverage for Internet of Things devices? A. Losses resulting from a breach caused by a compromised smartwatch in a business setting. B. Costs associated with a distributed denial of service (DDoS) attack. C. Legal defense costs for privacy violations related to customer data. D. Loss of revenue due to system downtime caused by a cyber attack on servers. Answer: A. Losses resulting from a breach caused by a compromised smartwatch in a business setting. Explanation: cyber insurance policies covering IT devices are designed to address risks specific to devices connected to the Internet, such as smartwatches, sensors, or cameras. If an IT device is compromised and causes a data breach or other harm, the policy may cover the resulting costs. This coverage typically does not extend to broader DDoS attacks, legal defense costs, or business interruption caused by servers. Question 17. What is the primary purpose of adding the social engineering fraud as an endorsement to a cyber insurance policy? A. To provide coverage for fraudulent financial transactions made through hacking. B. To cover losses resulting from employees being manipulated into transferring money or data. C. To protect against ransomware attacks. D. To address the costs of replacing stolen intellectual property. Answer: B. To cover losses resulting from employees being manipulated into transferring money or data. Explanation: social engineering fraud endorsements cover losses from fraud or manipulation, typically where employees or other individuals are tricked into divulging sensitive information or transferring money. This endorsement is particularly useful when hackers impersonate legitimate business partners or employees to carry out fraudulent activities. Question 18. Which of the following best defines cyber extortion as it relates to cyber insurance coverage? A. A legal claim filed by a customer whose data was exposed in a breach. B. A demand for payment in exchange for not releasing sensitive company data or disrupting operations. C. The act of stealing funds from a company's bank account through hacking. D. The destruction of physical property as a result of a cyber attack. Answer: B. A demand for payment in exchange for not releasing sensitive company data or disrupting operations. Explanation: cyber extortion typically refers to situations in which hackers demand payment, usually in cryptocurrency, to prevent the release of sensitive data such as intellectual property or to avoid further disruption to business operations. This is commonly associated with ransomware attacks where hackers threaten to release stolen data unless a ransom is paid. Question 19. Scenario: a healthcare provider suffers a data breach in which the personal health information of its patients is compromised. The provider immediately notifies affected individuals and begins offering credit monitoring. Which of the following coverages under cyber insurance policy would most likely apply to the cost of credit monitoring services? A. Cyber liability coverage. B. Business interruption coverage. C. Data breach notification coverage. D. Ransomware coverage. Answer: C. Data breach notification coverage. Explanation: data breach notification coverage generally includes costs incurred to notify affected individuals and offer services such as credit monitoring or identity theft protection. This coverage is critical for healthcare providers and other businesses that deal with sensitive personal information, ensuring that the business meets legal obligations while protecting affected individuals. Question 20. What type of loss is typically excluded from coverage under cyber insurance policies? Business interruption coverage. A. Loss of revenue due to a ransomware attack. B. Losses resulting from a system downtime due to an internal employee. C. Losses from a DDoS attack affecting a public-facing website. D. Loss of revenue caused by a data breach involving sensitive customer information. Answer: B. Losses resulting from a system downtime due to an internal employee. Explanation: business interruption coverage is generally designed to cover losses that result from external cyber incidents such as ransomware or DDoS attacks. However, it typically excludes losses caused by internal employees, as these are considered part of normal business operations rather than a cyber-related threat. Question 21. Which of the following best describes the concept of moral hazard in cyber insurance? A. The idea that businesses may intentionally expose themselves to cyber risks to increase their insurance premiums. B. The tendency for insured entities to take on more risk after obtaining insurance coverage, knowing that they will be reimbursed. C. The requirement that insured entities share their cybersecurity practices with insurers to mitigate risks. D. The mandatory policy provision for offering risk management services to insured companies. Answer: B. The tendency for insured entities to take on more risk after obtaining insurance coverage, knowing that they will be reimbursed. Explanation: moral hazard refers to the behavioral shift in which insured entities may take on more risks or act less cautiously, knowing they have insurance to cover potential losses. This can occur when businesses feel less incentive to prevent cyber risks or invest in robust cybersecurity measures because they believe their insurance policy will absorb the cost of an incident. Question 22. Which of the following factors could increase the cost of a cyber insurance policy for a small business? A. The business's use of outdated antivirus software. B. A large number of customers who rely on the business's online services. C. The business's inability to recover data after a breach. D. All of the above. Answer: D. All of the above. Explanation: each of these factors can lead to higher premiums for a cyber insurance policy. Outdated antivirus software increases vulnerability to attacks, while having a large number of customers who depend on online services increases the potential impact of a breach. Additionally, an inability to recover data from a breach demonstrates poor disaster recovery plans, which could result in higher costs for the insurer. Question 23. What is the primary difference between first-party and third-party cyber insurance coverage? A. First-party coverage covers losses the business itself suffers, while third-party coverage covers liabilities to others. B. First-party coverage only applies to physical damages, while third-party coverage covers all types of cyber incidents. C. First-party coverage applies to external data breaches, while third-party coverage applies to internal threats. D. There is no real difference. Both types of coverage offer identical protection. Answer A. First-party coverage covers losses the business itself suffers, while third-party coverage covers liabilities to others. Explanation. First-party coverage addresses the financial impact of cyber incidents on the business itself, such as data recovery, business interruption, or extortion. Third-party coverage, on the other hand, covers the business's liability to others, such as legal claims from customers or vendors whose data has been breached. Question 24. Which of the following best describes the function of a waiting period of a cyber insurance policy? A. The period during which the insured must fix any vulnerabilities before coverage becomes effective. B. The time between the occurrence of a cyber event and the start of insurance coverage. C. The period during which the insured is required to notify the insurer of a claim. D. The time it takes for the insurance company to pay out a claim. Answer B. The time between the occurrence of a cyber event and the start of insurance coverage. Explanation. A waiting period is a deductible-like period in which a cyber insurance policy does not provide coverage immediately after a cyber event occurs. This means that the insured must wait for the coverage to begin, and any losses during this period may not be reimbursed. It is often designed to avoid paying for events that occur just before the policy takes effect. Question 25. Which of the following is typically covered by cyber insurance's data breach response coverage? A. Loss of revenue during a system shutdown. B. Costs associated with legally required notifications and credit monitoring. C. Damages paid to customers for emotional distress. D. Losses from intellectual property theft. Answer B. Costs associated with legally required notifications and credit monitoring. Explanation. Data breach response coverage typically includes costs for notifying individuals affected by a data breach, offering credit monitoring services, and covering legal fees related to breach response. It is specifically designed to assist companies in managing the aftermath of a breach as required by regulations in many jurisdictions. Question 26. Which of the following situations would most likely trigger a cyber insurance claim under a network security coverage endorsement? A. A company is sued by a customer for a privacy violation. B. A company's data is encrypted by ransomware, causing a disruption in its operations. C. An employee unknowingly sends an email with sensitive information to the wrong recipient. D. A third-party vendor suffers a data breach that exposes the company's data. Answer B. A company's data is encrypted by ransomware, causing a disruption in its operations. Explanation. Network security coverage typically applies to incidents involving unauthorized access or disruption of the company's network. A ransomware attack which locks data and disrupts operations is a common event that triggers this type of coverage, as it directly involves a network security breach and operational downtime. Question 27. Which of the following is a key factor in determining the premium cost for a cyber insurance policy? A. The type of cyber incident the business is most likely to face. B. The business's level of cybersecurity preparedness and risk management protocols. C. The number of employees in the business. D. The amount of revenue the business generates annually. Answer B. The business's level of cybersecurity preparedness and risk management protocols. Explanation. Insurance premiums for cyber policies are often influenced by how well prepared a business is to prevent and respond to cyber threats. This includes having strong cybersecurity practices, protocols for incident response, and preventive measures in place. Insurers may offer low premiums to businesses with strong risk management strategies, as they are considered less likely to experience a costly breach. Question 28. Scenario. A company suffers a breach that exposes customer credit card information, leading to fraudulent charges on several accounts. The company reimburses affected customers and credit monitoring services are provided. Which type of cyber insurance coverage will most likely cover the costs incurred by the company? A. Business interruption coverage. B. Cyber extortion coverage. C. Data breach response coverage. D. Ransomware coverage. Answer: C. Data breach response coverage. Explanation: data breach response coverage would apply to the costs associated with managing a data breach, such as reimbursing customers for fraudulent charges and providing credit monitoring services. This type of coverage is specifically designed to address the aftermath of a breach that exposes personal or sensitive information. Question 29. Which of the following is typically excluded from coverage in most cyber insurance policies? A. Losses from a hack that results in system downtime. B. Legal fees associated with defending against the cyber-related lawsuit. C. Losses from a cyber attack that was perpetrated by an employee with malicious intent. D. Costs of restoring lost data after a breach. Answer: C. Losses from a cyber attack that was perpetrated by an employee with malicious intent. Explanation: most cyber insurance policies exclude coverage for intentional malicious acts committed by employees, such as theft or sabotage of data. This is because these actions are considered to be outside the scope of coverage, as the employee is acting with intent rather than negligence. Question 30. Which of the following would most likely be covered under cyber insurance? Is cyber crime coverage. A. Losses resulting from a phishing scheme that leads to the transfer of funds. B. Legal defense costs arising from a lawsuit filed by a competitor. C. Costs related to data recovery following a system failure. D. Damages from an employee who steals company intellectual property. Answer: A. Losses resulting from a phishing scheme that leads to the transfer of funds. Explanation: cybercrime coverage typically covers losses arising from criminal activities such as phishing scams, in which an attacker deceives employees into transferring funds or accessing sensitive information. This coverage is designed to protect businesses from financial losses due to fraudulent actions taken by cybercriminals.